Hey guys, how to treat wedge pattern. In this video, I will teach you how to spot a wedge pattern, how to identify it, how to treat it. We'll discuss the meaning, the logic behind this pattern, and I will share with you very useful tips. Please don't forget to like this video and subscribe to my trading view page. So I want to start with the basics. As always, we will start with the theory because theory here is very important. Let's take such a price action. Imagine the market is trading in a bullish trend, and in a bullish trend, after a very strong bullish impulse, we see a bullish trend continuation. But this bullish continuation becomes weaker. Here, if we take the highs, we can draw a trend line. And if we take the lows, we can draw one more. Here we have a perfect example of the rising wedge pattern. And this pattern is considered to be the reversal pattern. And moreover, this pattern is considered to be a very bearish pattern. Why? What is the logic? The point is, traders, that within the wedge, bullish impulses become weaker and weaker, right? If we take our initial bullish impulse, right, and compare that to the following impulses, you can see that bullish pressure becomes weaker. And the point is that at some moment, buyers lose confidence in this bullish market, right? And sellers start pushing, and the price manages to break the support of the wedge. So the main point here, traders, is to understand that wedge pattern by itself is the warning sign. Yes, it is a very important bearish clue, but it is not the signal for you to sell. The exact signal that you should look for is a breakout, a bearish violation of the support of the wedge. Once it is broken, then a bearish continuation is expected. Same thing with the falling wedge. Yes, after a strong bearish impulse, the market keeps trading in a bearish trend. Yes, but we can see the contraction of a price action. You can see that here the selling waves become weaker and weaker. Once we spot such pattern, our first task is to wait for a breakout. Yes, we should wait for a violation, a bullish breakout of its resistance. That is our trigger, yes, for buying. Only when we see the violation of the wedge's resistance, only then we expect a bullish continuation. And the pattern by itself is just a warning sign, right? Now let's discuss the example. On the P&OZ pair, here on a daily time frame, you can see that the market is trading in a bearish trend, right? You can see that the market is falling. In analyzing the price action, you can see it right here. We can spot the wedge pattern, right? And why this wedge right here is a bullish pattern. Take a look at this bearish trend. Here was our initial bearish impulse. Then here's our second bearish impulse. Then here's our third bearish impulse. And here's our fourth bearish impulse. You can see, traders, that again, the price action is contracting. Bearish waves become weaker and weaker. And you can see that the last impulse is phenomenally weak. And what do we see now? Now we see the breakout attempt of the resistance of the wedge. Why I see attempt? Because we can see that the breakout to be confirmed only when we see the candle close above, right? And for now, the candle is not closed. It is 10 hours more to wait before the candle closes. Moreover, traders, I really wanted to share with you a very important tip about wedge trading. quite often we see false breakouts of its support or resistance. In order to avoid a false breakout, it's highly recommendable to wait for a breakout of the last little high within the wedge as well. Yeah, so you are kind of looking for a breakout of the wedge's resistance and also the last little high level as well. Yeah, so you are kind of waiting for a double breakout. And once you spot this double breakout, you can look for buying opportunities. Yes, it's highly preferable to open your long position on a retest of the broken resistance of the wedge, and your initial target will be the closest strong structural resistance. Here it goes. Stop loss will strictly lie below the lows of the pattern. So let's measure our risk to reward for this trade. Here it goes. Right here is our risk to reward for this swing trade. Yes, and again, first condition is to wait for a breakout of the resistance of the wedge for the daily candle close above. Then we are waiting for a breakout of the last new high level. Yes, and only then we can set our buy limit on a retest, and we should wait for the entries. Wedge pattern is very accurate price action pattern, and I frequently apply that in trading. I really want you to try this pattern because, in my view, it is very powerful pattern. Let me know, traders, what do you want to learn in the next video? Also, please like this video and subscribe to my trading page.